In trading, it's always about trading with the trend. And everyone knows exactly these three types. We have an uptrend, a downtrend, and a sideways trend. Unfortunately, not every chart looks like it does in the textbook. And that's exactly what we're going to talk about today. How can we actually identify the real trend in a real chart? And above all, which time frames really matter here? If we're scalping on a 5-minute chart, what do we need to pay attention to? Do we need to look at the 1-hour chart, daily chart, weekly chart? What do we really need to focus on? You'll find out exactly all of this in today's video. If you like this content, go ahead and leave a like and subscribe for free. Let's briefly go over the trends again. So we can easily recognize an uptrend by looking for the formation of new highs. This is independent of the time frame at first. So it doesn't matter whether this happens on the 5-minute chart, the 1-hour chart, or the daily chart, the approach is always the same in the end. And of course, we don't just form new highs, the lows also have to follow suit, of course. The lows also have to be higher, so that's completely normal. An uptrend, a downtrend is exactly the same, just in the opposite direction. We always have to form new lows, and of course the highs also have to be lower each time. And we recognize a sideways trend by the fact that the chart has highs and lows that move completely sideways. But even here, there are deviations. That means it doesn't always have to run perfectly parallel next to each other. Sideways trends can also look a little different, but we'll get into that in detail in a moment. That means this should be the foundation that each of you needs to know. We have 3 different trend directions. The problem is that these trend directions can change throughout the day or become intertwined with each other. And that's when things get complicated. And that's exactly what we're going to look at now in a real chart, how we implement and properly read all of this. But before that, I want to go over how we actually define a new high. And I always do this based on the candle close. If we take a look here, for example up here, we can draw a line. This up here was our last high. I then wait for this high to be broken again and for the candle to close above it. If the candle just wicks slightly above it, for me that's not a new high. In that case, I assume it's a liquidity grab. The problem with this is we're currently on the 15-minute chart, and here we can see that a new high has formed. Does this now mean that it will automatically continue going long? You can see in this case, no, of course not. That means the 30-minute, 1-hour, 4-hour chart. It could be, of course, that here it didn't manage to form a new high. And here you can already see exactly where the problem lies. We look at it and see perfectly. We've formed a new high on the 15-minute chart, so it must continue going long. But the 1-hour chart might say, well, but the trend here is definitely currently heading short. So trading long right here might still be way too early. So what does that mean in the end? The higher time frame wins. That means we first have to determine the main trend in the higher time frame before we move into the smaller time frame. And if you want to get started with trading now and you're still looking for a really good broker, then I can highly recommend Vantage to you here. I've been with them for over 6 years. You even get 50% on your first deposit. It's one of the best brokers, low spreads, low fees. And of course, you can also just create a demo account right away, take a look at everything, and try out exactly what we've just discussed directly on a real chart. So feel free to check it out. The link is in the video description. But before we discuss this in detail in a moment, let's quickly go over trend breaks again. So how do we recognize new lows forming again and again here? And here we always look very clearly at the candle close. That means we mark this area here and see, perfect. Here it found nice support. That means after this area breaks, downwards here, we have a new low. When do we know that the low down here has really been formed? And let's say that this is really the bottom and the chart could start moving long again? We don't know that. But what we do know is that as soon as there's a small recovery moving long here, we could say, perfect. Right below here, we now have our next low. Yes, that means we look at where the candle closes are and we use those here. And here, for example, you can see that this area was broken and then even used for a retest again. That means, of course, that's possible too. What I wouldn't do now is take this wick here and use it as resistance or say that this is our last low. A very important point. Always at the candle close, that's how I do it. This doesn't mean that this is the only correct way or that you can only do it like this. But that's exactly how I evaluate a new low and a new high, because then we know exactly when buyers and sellers were really able to defend this price area for 15 minutes. Yes, that's why we wait for the candle to close, which means we know that in this area, they managed to find enough buyers for 15 minutes so that the chart closes exactly there. And that's exactly how you can keep doing it the whole time. That means we wait again for a new low. We wait for a brief swing upwards. Then here we have a new low again. That was broken again here. We can say, perfect, this is now our new low. That was broken again. And so on. You basically keep doing this the whole time until at some point you notice, wait a minute, now we can finally really see it. A lot of buyers are coming in. So that's the first sign that it could start moving long again. Does that mean it actually will? No, of course not, because the higher time frame will clearly show you, yes, the chart is heading short here. That means don't jump into any trades too early. We've just learned how to determine the trend here, meaning how to keep identifying new lows and then know exactly, okay, it's continuing in the short direction. Now we can also use a trend line here to help us. We can draw that in. Here too, I always use the candle close. I never make the mistake of using the wicks here. You can include the wicks as well. Yeah, don't get me wrong. But personally, I prefer not to use the wicks here, but instead to always use the candle close in the end. Okay, that's really important to me. That's why you should draw the trend line in exactly the same way. You should have at least 2 or 3 points of contact here. And you can see right here we have a nice downward trend. And as long as this doesn't break, there's no need for us to even think about it. Thinking about trading long. It can be that simple. Just draw a trend line for yourself. As long as it holds, things will continue to move in the short direction here. When it breaks for the first time, like down here, then we have the first indication. Oh, wait a minute. It could be that things are now going to move in the long direction. So when do we actually know that? If we look at the trend here now, we can see that it keeps going short. Now we need to mark our highs and lows here. So that we can also recognize the trend reversal. That means, where is our low here? We have it down here in this area. That's our last low. And where is our last high here? The one that's interesting? In this case, it could be exactly this area. If you're unsure about that, then take the area here where you can clearly say, okay, from this point on, that's where this downward movement started. That means for it to continue going long, we would now have to wait for at least that area up there. I've marked it in blue to be broken. Why is that? Well, after a downward phase, an upward phase doesn't automatically follow, as we can see here. We clearly have a sideways phase forming here. But even this sideways phase already shows us a tendency, which we just discussed, where we said, yes, if it closes above this level, then we've already formed a new high. That doesn't mean we go long right away, but you should just understand, how do we recognize it here? New highs. That means we would have a new high here, then another new high, which is even higher. So we can already see, okay, the chart apparently wants to slowly fight its way upward. In addition, let's now mark the new lows that have appeared. And then we can clearly see from this movement. Here down here we also have a new low. And what is this low? Looking to the left side, it's higher. That means you can already see, okay, the low is higher, the highs are higher. So what have we learned? That would be an uptrend. Now, of course, there is also the sideways trend. And we've basically already excluded the sideways trend because we said we only want to go long again once we break above up there. Only then do we know that the trend has been broken here. That means everything down here can of course be traded long. In the scalping area, that's doable. But you have to keep in mind that we might currently just be in a sideways phase where the chart is taking a breather. So we shouldn't just take the first opportunity here and assume that the chart will immediately shoot all the way back up. Because we've also learned especially that the higher time frame almost always wins. If we look a bit further to the right now, because that's what everyday trading looks like, then we can also see now. After the new high, new lows have now been formed here, which are clearly lower than the left side here. And that could be a sign here that things might continue to move in the short direction, because as we've learned, after a new low down here, it should continue further in the short direction. Yes, that's correct so far, but only if, after the new high up here, another new high is formed that is lower. And that's exactly what didn't happen in this case. Yes, it formed a new high here again, so this down here remains to be considered an intermediate low. And here too, the point is that up here we have our massive resistance, which truly confirms our trend reversal. And below we can actually draw another line. That's really how it is structurally. That is, yes, I would say the lowest low. So as long as this down here hasn't been broken, the trend doesn't continue in the short direction. That's an important point, okay? That means everything happening in here is now the sideways phase anyway, which we were able to recognize so far. So that simply means that this area here is always difficult to trade. you'll often notice that new highs are formed again and then suddenly new lows as well. And everything in here is always a bit vague, and you don't really know where it's going next. These are exactly the sideways phases where you lose the most money. That means try to avoid these phases here, of course. At first, it's not so easy to do, but that comes later with experience. But what we can clearly see up here now is that we're forming new highs. And if I just let this run a bit further, you can see, yes, clearly the chart now wants to go long again. So we know perfectly after this trend line break here from this downtrend and the signs we already received that it wants to form new highs here, also with this extremely bullish candle, we know, yes, the assumption was correct. And now we clearly have our trend break here, and we know, awesome, let's go. Now we can start looking for long trades here. And here, we're not doing anything other than simply marking here the highs at the top. We include the highs. Then, of course, we also include the lows again. Now we have to see where it forms a new low here. Of course, it makes pullbacks again. That's completely normal. And then we mark the low down here if we can identify one. For example, here we can now identify one because the chart has moved up nicely again. So now we can clearly see that the whole thing wants to move in the long direction again. So we've formed a new high, an intermediate high, which is also higher. And that's exactly what today's session is about. That you really understand what I'm explaining to you here. You need to look at where the candles have closed. And right now we're only looking at the 15-minute chart. We'll combine all of this with the larger chart in a moment, but you need to understand this part first, okay? So to summarize again, a downward phase always forms new lows based on the candle close. And this must be clearly broken. But as soon as the whole thing then moves back into the other direction with momentum and at least breaks through a trend line, we already have an indication that the trend might be about to change. But that doesn't mean it's actually the case, because we then have to see whether it forms new highs or new lows. That means at that point you still don't know for sure. In this case, we already received very good indications here, because within the structure we formed new highs. So we assumed that it would continue to move in the long direction anyway. And in this case, we then had our, yes, perfect confirmation that the chart moved long. Now, many people say, well, couldn't you have traded this as well? Yes, of course you could have tried that, but at that point down here, you just don't know yet. There are strategies where you trade exactly this setup. That would be a nice liquidity grab and then a nice long position. Sure, we can talk about that again, but for now, we're just focusing on the trend here. So, the trend says the following. Now it's moving in the long direction again. Now it came down again here and found support at this point. And not just simple support there, but also on the left side here, where it previously formed new highs. So you can remember directly, the chart often returns to these areas, finds support there, and then continues from there. Long, and here too, the market continued to move in the long direction. And what did it do here? It formed a new high up here again, because if we look closely and draw a line, we can see that these candles closed above it up here. So we know, perfect, we are still in an uptrend. It's still continuing in the long direction. We have also formed higher lows below, and that's exactly what you need to understand. You need to understand how to read the chart like this. And as soon as a low down here is broken, no matter which one, whether it's this one, that one, or this one down here, then we have another sign that we might go short again or enter a small sideways phase. That means, as you can see, of course, the whole thing is moving upwards now, but not with as much power as it did here. Here, it was clearly moving with the trend towards short. That means this already looks very much like the chart doesn't have much power left towards long. So it could be that we'll come back down here again soon. I'll just let the whole thing run here for now. Let it keep running. The chart came down again here as well. What did it do now? Now it has formed a new low again. That means here from the candle close, we've got a new one down there again. If we maybe take the line again, I'll quickly delete this here and put it back in again. This low here was broken again there. So here we have a first indication that it might go short again. But that doesn't necessarily mean the chart will do it, because the first candle break is not immediately a trend reversal. Okay, very important. Because here too, we're now in a small upward trend. And now you might say, okay, how do we handle the trend lines here? And well, if we look to the left side, we said we have one down here, our low. So from this low here, we now take the trend line. One touch, two touches. That means as long as this holds, we have a small upward phase. And if I just let the whole thing run here, you'll see how it all works. So it works here. So the chart has rebuilt itself here, but again towards short, has formed new lows again and is now moving in a small sideways phase. So if we just look at this whole area here, this entire area, it's currently a sideways phase after the sideways phase. You see, it's not always so easy to trade this, but we can also take advantage of it by looking for trades exactly in these areas, always from the bottom up, from the top down, and so on, while still following the trend. That really works very well. I've already made videos about it, but today the focus is more on the trend. That means as long as this line down here isn't broken, the whole thing will continue to run long. And to illustrate once again in a simplified way what the trend looks like, just focus on these points here. We have a low down here, then a higher low, then from that we formed a very clear new high, and that's our highest high, so to speak. Then there was an intermediate low. That means if this intermediate low here is broken, let's mark it now. If this is broken, then we know, okay, that's the first indication that things could start moving in the short direction again, okay? So let's take a look. This is our high, this is our low, and this is the range we're currently in. And after the whole thing was broken here now, yes, exactly. The low was broken perfectly here. We can see, okay, gold wants to continue moving in the short direction. And what else did it do? It completely broke through our trend line here. That means here, since the whole thing was broken through, that means from this point on, we know, okay, the chart actually wants to move in the short direction again. And if that's still not enough for you, as a trend reversal, so to speak, to show that it's heading short again, well, what do we do then? Then we like to go back in and say, okay, we'll wait for this low down here to be broken, because then we'll definitely know that the chart is continuing the downtrend here. That means I'll just let it run for a bit and we'll simply take a look at how it all played out. So the chart first moved down, 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 and now it has broken through this area here. We have clearly formed a new low. That means from this point on, we are, of course, especially looking for short trades. And you can see that after that, the chart dropped significantly lower here as well. Now it's making a nice bounce back up. We already know this. We just talked about it a moment ago. On the left side, this area is often used as support again. And that's exactly what the chart is doing right here in this area. It's using this area from the left side again as support, or rather as resistance. Now we have our new low down here, and of course we have to wait now for it to break again. As I said, today is really just about making sure you understand the trend. So now let's take a quick look at this area and see how everything played out here. The chart moved sideways here for a bit. There were definitely strong resistances up there. It even dropped significantly lower again here. That means, as you can see, just because it breaks here, it doesn't immediately mean, yes, now it's only going short from here. But we've actually forgotten one thing. Namely, we haven't marked our high, after which we would start looking for long positions again. And from this downward movement here, at a minimum, I would say it's this high in this area. Why there? Well, the chart found brief support here and then made this break to the downside. So let's just mark that quickly and say, okay, if we get back above that level, then it might actually continue upwards, back towards long. And then we know as a conclusion that this move down here was just liquidity that it picked up, and now it wants to continue going long. But let's see what the chart has done now, because if it goes below here, of course we'll go along with it again. We're seeing gradually higher lows again, so that's actually another sign that it might go up again. But now we would have to break the structure up here in the other direction. I hope you understand what I mean. So I'll just let this play out further. Let's see what the chart has done. It tested that area up there again. And after that, it sold off everything downwards again. And right here we can see, oh, wait a minute, it has already formed a new low again. So this upward move here was just a temporary one. That was basically just a small, brief correction phase. And now it actually wants to go short again. That means these correction phases, we'll briefly discuss them again in a moment. But first, let's look at this again. What did the chart do afterwards? Did it form new lows again? And yes, down here, it formed new lows again as well. So you see, this is exactly how you can read the whole thing here. Yes, so it's really about reading the market, about which direction the whole thing is going. And after that, the whole thing continued strongly in the short direction. That means we could already, to summarize again, we could already see that from the moment the chart broke through this trend line here, it no longer wanted to go long. Okay, an important point. That was a brief intermediate phase, which always happens when the chart sells off so extremely. Then there are these small sideways phases, recovery phases, after which another breakout occurs and the overall trend continues downward. And that's exactly the point. So without going into it again here, yes, let's say, without going even deeper. Going deeper into the subject would be too much right now. I hope you have now at least roughly understood what we need to pay attention to. Yes, we always have to pay attention to the candle close, and that determines which direction things will go. And in the larger chart, it's also very, very simple because here we're doing exactly the same thing we just discussed. Up here we have a new high, then we clearly formed a new low below that, then here we have another intermediate high, and then we formed another new low, and so on. It's always the same principle over and over again. That means from that moment on, we know perfectly well that things are heading short. And how do we know that? Well, if we look at it and mark it exactly like that, saying, okay, here we clearly have our resistance level, and after this is broken, again with a candle close, same principle. Then we move to the smaller time frame and do exactly the same thing again. Okay, exactly the same. Then we look here perfectly. Maybe we scale the whole thing down here towards short. We're basically going with the trend. At some point, of course, the moment will come when the whole thing finds its bottom down here. We just learned that a moment ago. We can see that by using a trend line. We can also draw it in on the 1 hour chart. You can see the whole thing here. After this is broken, it's quite possible that the whole thing will reverse trend and go long again. It did that here as well, at least in the short term. But here, as you can see, even more clearly on the 1 hour chart, it has entered a sideways phase. So what do we do then? Well, we mark our low down here if we want to keep trading short. Or if we want to trade long, then we want the chart to break above up there. That means we wait again and see, okay, what did the chart do? And in this case, it formed a new low here again. So we know, perfect, down here we now have a possible new low, which clearly tells us, okay, the trend is continuing downward. From that point on, we switch back to the smaller time frame, look for our entry here, and continue trading with the trend in the short direction. That means this is how easily you can implement it in the end. And now you might say, yeah, it looks so easy here. Or maybe it was still a bit too complex, a bit too complicated for you. Then feel free to watch the video again. And why? Because this topic is really, really important. It's very, very important that you understand this. Then you can really give your trading strategy, no matter which one you use, a solid boost if you understand all of this here. That means we take the larger time frame, look at the trend, and then move into the smaller time frame and trade there as well, following the trend. And now you've learned that based on the candle close, we could theoretically also trade reversals in the opposite direction. And in the smaller time frame, we could also sometimes trade against the larger trend if the smaller trend allows for it. So, to sum it up once again, it's best to trade with the larger trend. If that's not possible, be aware that when you're in the smaller time frame, you're currently moving against the trend, which can also work if you position yourself correctly. The important thing is, just make sure the candles always close nicely. Mark new highs, mark new lows, and then go ahead and check all of this on TradingView here. And then you can simply practice it like that. And if you're still having trouble with it, and maybe you're also looking for a system you can trade with, then feel free to join us in the VIP group. We trade order blocks, it's a lot of fun and very easy to understand. So if you're interested in that and also want to get an analysis from me every morning, want to know what's currently happening on the charts, then the VIP group is exactly the right place for you. There are 100 members there, so definitely check it out. The link is in the video description. That means we're done for today. I hope you enjoyed it. If so, be sure to leave a like, subscribe for free, and see you next time. Take care. Ciao, ciao.